Hello, good afternoon, everyone. Is my voice is clear to hear?
Yes, sir.
Oh, thank you for responding, Radvan. Yeah, thank you for coming early. Since we still in 15 students, but I think it's okay to start the sessions for today. Let me to open PowerPoints. Yeah. I send you the materials in the chat room because the our virtual class platform or UVC, Ukrida Virtual Class, is still in under maintenance until the 19th of March. So we cannot do to place our materials, the recordings, and also with the uh, quizzes. So I'll change the moment of the quizzes and also the materials just directly in a Zoom meeting so you can access, you can download while we are in the sessions or in the classes. Okay. For today's sessions, we have the specific topics in a consolidations of financial statement. So the specific case is a statement in a public sector accounting. Taken for the public sector accounting ebooks in our e-materials from the chapter 4. Okay. Sorry for the mistakes. Yep. Today we have 4 learning objectives. We need to understand first what is the concept of consolidated financial statement, specifically in a public sector entities. Then we will identify the different consolidations for approaches and for the methods in a developing of financial statement in a public sector entities. And then we explain the roles of the EBSAS standards in making some consolidation report. And also in the end of the sessions, you have the discussion challenges of consolidating public sector financial statement that we have learned in the previous meeting, session 3, and today's meeting in session 4. So to open the materials or to start with the material, we will take the first actions or the first point from the introductions into the consolidated financial statement or CFS. The CFS or the consolidated financial statement, it means that we need to combine all of the statement in the government level since we have the local governments and we will to make some connections into the central government and we have some control entities into a single or set of the statement. So between the local government, while they have the different financial statement, the central government will provide with the consolidated financial reports that consist of central government and a local government. So this is the definitions. What is the meaning of consolidated financial statement? So the consolidations have some purpose to provide with some comprehensive view between the governments. It means that we have the comprehensive view between the central governments from the top until the local government in the downsides with the view from the finance activities and also with the accountability of activities. So this consolidated financial statement is also relevant to ensuring with the transparency and also the comparability between the financial reporting that produced by the governments. So, before we going into the next informations about what is the consolidated financial statement and the details, let's take a look for several minutes to see or to make some understanding for what is the consolidated financial statement.
IPSAS 6, Consolidated and Separate Financial Statements, provides guidance on how public sector entities should prepare and present consolidated financial statements when they have subsidiaries. The primary objective of consolidated financial statements is to present the financial position, financial performance, and cash flows of a reporting entity and its subsidiaries as a single economic entity. This provides a comprehensive view of the financial activities of the group. A subsidiary is an entity that is controlled by another entity, known as the parent. Control is the power to govern the financial and operating policies of an entity so as to obtain benefits from its activities. The financial statements of subsidiaries are consolidated line by line with those of the parent using uniform accounting policies. Intragroup balances and transactions, including any profits and losses resulting from them, should be eliminated in full. Non-controlling interests represent the equity interests in a subsidiary not attributable to the parent. They are presented in the consolidated statement of financial position separately from the equity of the parent. NCI's share in the profit or loss of the consolidated group. When there is a change in ownership interests that does not result in the loss of control, the carrying amounts of assets and liabilities are adjusted without restating prior years. Any difference between the amount paid or received and the carrying amount of the non-controlling interest is recognized in equity. IPSAS 6 allows for differential reporting for certain public sector entities when it is impracticable to prepare consolidated financial statements. In such cases, the parent's individual financial statements may be presented along with separate financial statements for significant subsidiaries. IPSAS 6 provides guidance on the accounting treatment of joint ventures and associates. Joint ventures are entities jointly controlled by two or more parties, and associates are entities over which the investor has significant influence but does not have control. IPSAS 6 includes disclosure requirements related to the consolidated group's composition, the nature of any restrictions on the assets and liabilities of subsidiaries, and the nature and extent of any significant restrictions on the ability to access or use assets or settle liabilities within the consolidated group. Entities are required to ensure that their preparation and presentation of consolidated financial statements are consistent with all applicable IPSAs. If a conflict arises between IPSAS 6 and another IPSAS, the requirements of IPSAS 6 prevail. Consolidated financial statements prepared in accordance with IPSAS 6 provide a comprehensive view of the financial activities and financial position of a reporting entity and its subsidiaries. This helps stakeholders, including legislators, creditors, and the public, understand the overall financial performance and financial health of the group as a whole.
Yeah, that is the understanding what is IPSAS number 6 that containing about the financial statement for the public sector entities. While it's not in the positions like the companies, but the
IPSAS 6
IPSAS 6 or with the consolidated financial statement is also allowing for the entities in a public sector to make some actions like the parents and a subsidiary, or we in the same term we call it the non-controlling interest. So they will have the consolidated reports to ensure the transparency and also the accountability. So after the introductions to the consolidated financial statements, we have known that there is a four benefit while the public sector switch to the consolidated in their financial reporting. So they have the benefits in the financial transparency. It's more improving and also leveraging their accountability. With the consolidated report, it's helped the entities in a financial planning and also with the resource of allocations. And then the consolidation report will reducing the risk associated with the off-balance sheet entities activities. So this report, I mean the consolidation, also aligning with the IFRS or the International Financial Reporting Standard, especially comply in the public sectors under the IPSAS or the IPSAS board. So while we learning about the consolidations, we have the three approaches strategies. In a common entities or the common approach, we have the entity approach. This is the most or the commonly methods that using by the governments in most of the countries to focusing their economic unity to the government and creating some separations report, and we have the informations for its control entities, or we have the specific term non-controlling interest. The second approach is name a proprietary approach. This proprietary approach is focused for their shareholder or controlling percentage and their specific interests. For the examples, proprietary approach is very suitable for the state or the region of the nations. But in overalls of the countries, they should be in entity approach mode. The last, the approach is about the financial accountability approach. This approach is includes as the entity to make some financial independence. So they will be creating some general of the budgets with the referral sources from the central government. So we will check about the dependency ratio from the local governments to the central governments. So if they have the great or high dependence, it means there is no accountability. They should be in an independent budgets or independent financial profitability. This is the three approaches to creating consolidation financial statement reports. And the methods to create some consolidations, we have the three methods as the full consolidations, the proportional consolidations, and within the equity methods. Even the full consolidation is mandated by the governments or the countries, but most of them is using the equity methods because they doesn't have the full control over the entity. In the subject of Ipsos board, the full consolidation is a must, but the full consolidation have the leak or with the disadvantage, while the governments should have the full control of the entity. So it means that the government should be in a centralized mode, not in a decentralizations. So while we learn about the topical is the politics and also in the economic, most of the countries is not approaching with the centralizations. They should be in a decentralizations because there's a lot of activity that should be controlled by the central governments. The second method is named the proportionals. This is used when the governments want to make a shares control or with the trust control with the another entities. Especially this is for local governments. But in the fact or in the reality, the proportional consolidations will not useful for the specific or the most of the countries. The most method that should be used in the nations or the country is an equity methods, because we know that there are separations between a central governments and a local governments. So the central governments can make some objections or with some decisions to the local governments, but in the same times, the local governments has the independence of decisions. So the central government cannot control or cannot influence with the local governments. So the equity method is more suitable for especially in the east countries like in the Philippines, in Indonesia, or also India, Singapore, and Malaysia, because while the central government is still active, they doesn't have a significant influence also with the control to the local governments. They have a difference or independence leader. We call a local leader. This is the three methods to make some consolidations financial report. And as long as the standard is comparisons with the international or the global informations, we have three following standards allowing the IPSAS. We have the IPSAS number 35 that define what is the control entities and also what is the consolidations procedure. We have the technically an accounting process or the procedures to define this control and also make some consolidations to prepare financial reports. The second one is about the IPSAS number 36. It covers about the investments or the controlling interest will associates in the joint venture between the public sector entities. And also the next standard is IPSAS number 37 that will be make some arrangement or make some eliminations. What is the transactions that should be eliminated in a controls like the parents and also with the subsidiary, and what is the kind of consolidation procedure that should be expressed by the government financial accountants. So this is the three standard that has been the key factors to creating some consolidation report in the financials entities in the public sectors. In the process, we have a 5 step to creating a consolidation financial reports. Number one, we need to identify what is the control entities and what is the parent entities. So how percentage are to be controlled with the units on how much the power or with the controls mechanisms or the decisions that should have by the entities or in the unit of entities. The second step is eliminate with the inter-entity transactions. The transactions between the parent and subsidiary and allowing with the subsidiary to the parent it should be eliminated because it will be make a double transactions and also it's not in the legal actions because we are in the one group or we are in the one unity of entities. The next step is make some adjustments. We need to adjust the differences between the accounting policies between the parents and also with the subsidiary. And after that, we have to recognize. The recognitions is means that we need to show up the percentage of controlling interest or what is the minority interest that should be applicable in this consolidations process. So, in the end of the process, we need to prepare the consolidation report with the combining between the subsidiary reports is provided by local governments and into the central government reports provided by the central accountant or the central governments. This is the 5 steps while we need to identify, eliminate, make some adjustments, and recognize the minority interest and also prepares in the full of consolidated financial statement. So let's have a look for several minutes. The type of consolidations that government finance in statistical or public sector debt will have allowing you or will show you what is the difference type to create with some consolidation reports.
When we compile GFS or debt statistics for all or part of the general government or public sectors, two types of consolidation may be necessary: intra-sectoral consolidation and inter-sectoral consolidation. Intra-sectoral consolidation is consolidation within a particular subsector to produce consolidated statistics for that particular subsector. For example, within the central government subsector or within the public non-financial corporations subsector. This consolidation may be required at two stages. First, a single institutional unit, such as the budgetary central government, may require consolidation. This is necessary when the budgetary central government has multiple funds and accounts to carry out its operations, and there are flows and stock positions among those funds. The source data for these funds and accounts comprising the budgetary central government are on a gross, unconsolidated basis. When we compile the data for the consolidated budgetary central government, in principle, we should eliminate all intra-sectoral flows and stock positions among these funds and accounts that make up the budgetary central government. Second, a group of institutional units may require consolidation. For example, to compile consolidated public financial corporations data, we would consolidate all intra-sectoral flows and stock positions between the public financial corporations. Inter-sectoral consolidation is consolidation between subsectors of the public sector to produce consolidated statistics for a particular grouping of public sector units. For example, consolidation among central, state, and local governments produces the consolidated general government sector, and consolidation between the general government sector and public non-financial corporations produces the consolidated non-financial public sector. Or consolidation between the general government and public corporation sectors produces the overall consolidated public sector. We always perform intra-sectoral consolidation before inter-sectoral consolidation.
So that is the video. While from the IMF short lecturing, the informations will allowing us to know that in the government financial sectors, we have the intra-transactions and inter-transactions. While we have the transactions between the central governments to the local governments, we call the inter-transactions, that it should be eliminated in a consolidated financial statement. While we have the transactions between countries to countries or between central governments from my countries into your countries, maybe in the Philippines. So they called with the intra transactions. So they cannot be eliminated. We only eliminate with the transactions between inter transactions between my central governments with my local governments. So this is how to make some differentiations between the inter-government transactions and intra-government transactions. So, based on this video, so we can find the several challenges that we can found in the public sector consolidations. And number one, we have a differences in accounting policy. It's also is very eligible while we combining in our entities. Maybe we have a different policy. Indonesia with the Vietnam, with the Philippines, and also with the Singapore and Malaysian, we have the different accounting policy. So we cannot make some consolidations based on the global standards. So they should be make some harmonizations in a standards. So it's very challenging while we combining with the local governments, especially in the same countries. For example, in my country, Indonesia, we have 34 provincials. They have a different resources. They have a different topology. They have a different procedure, and also they have a different age. We have the youngest of the provincials, and we have the oldest the provincials. So they can make be in a general or in line with the process. So sometimes we have the different accounting policy because the youngest area or in the youngest provincials or the youngest city, so they have the lenient accounting policy, not rigid like the old of the state or with the provincials or in the specific area. The second challenges comes from the how to define or how to identify that the local government have the control relationships. Sometimes we doesn't know, or sometimes there is no proof of evidence that we have the control activity between the local and the central governments, also with the subsidiary or with the parents entities. The next challenge comes to how we can eliminate with the inter-entity transactions. Yeah. As we know that inter-entity transactions is eliminating the transactions between the parent and subsidiary. But how we know, that is the questions. How we know there is an inter-entity transactions. We need to take a look. We need to make some assessment in the professionals or in the financial reports, so we can make some judgment or make some decisions that, oh, we should eliminate this transaction or we cannot eliminate these transactions. So it should be in a balances activity between the financial reports. The next challenge is how to manage with the risk and the liability. The risk and the liability is coming through with the consolidations reports. We cannot combine with the profit of area into the loss or with the deficit area. So this is very risky and very have lots of liabilities. While we have the youngest of the provincial area, sometimes they have the high financial risk. They're still in a deficit actions. They're still in the high of financials profile, in the risk profile, and we cannot combine with the old of area, the public sector, that they have should be in more stable than the younger or the youngest of provincial or area in the public sectors. The last challenges comes from the data collections and the system integrations. In the end of the challenges, we are back to the every government's actions. Some of government have providing all of the data collections, all of the system integrations, and the citizens can access in a free area, but not at all. The public sector entities doesn't have a website, doesn't have the common access for the citizens, and also with the several informations that we should be as the citizens, we should know what is the functions, what is the budgets, and how they can make some services to the civilizations between the public sector entities or public sector units. So this is the 5 challenges that we still find in public sector entities. So what is the role? What is the benefits? While we need to create a consolidated financial statements. The most and the first of all is make a clear decisions making. This is very helpful while we have the consolidated financial statement. With the consolidated report, it can help with the policymaker to assessing with the overall of financial health that will be allowing by the governments even they are in the central government or also with the local governments to assess their financial risk and also the financial liability. The consolidated report also supporting with the how we plan the budgets for next years, or maybe we can make some financial forecasting for the next 3 year or the next 5 year. Even they have support by the regulations in every countries. The consolidated report is also provide with the useful insights or this useful information for the external stakeholder, for like the citizens or maybe the investor for from the other countries, and also with the publics. The public sense or creating some public image. But in the current conditions, may the public image is not powerful again, like the last 10 years. You can see with the the general elections, or maybe with the your budgets, or with your current governments, they doesn't needs to make, or they doesn't care about the public image against. They only care about how much their follower in the social media or maybe in the social activities, not by the public image. Even they have the bad image, they still have the lots of the follower, so they can make some decision making, or they can have the power. As the old of the philosophy say that the power have the more control than the wealth, or the most of the goal. Yeah. So the power is winning everything. Then we have the money, or you can take the money, or you can take any other of wealth. So the end of the consolidated of the financial reports is also enhancing their financial responsibility, and also showing how much the risk that they can manage from their assets or the country asset, and also with their government's revenue. So they can provide with the budget strategies, and also with the activities that should have take some actions to creating some good services from the government into the citizens. So we have the one of the case study that you can seek for the European Commissions. You can look at they have the YouTubes, they have the Instagram, and also they have the websites from the European Global Commissions. So in the European Commissions, they apply about the hybrid approach to make some consolidation. Some country have the full consolidated. Some of the country also have the proportional consolidated, and most of the country still have the equity method. So they can, in the every countries under the European Commission, apply about the hybrid approach for consolidating their financials reporting. The combination of different consolidation is based on the structure of their entity. Even they are in the monarchy or in the democracy, and also with the parliamentary, they still combine about their entity structure. So this case of the Europe Commission of Global Consolidations provide us about the useful example that's how large the public entity that should be consolidate their financial report. So very large. So this is why the England, and also with the several countries under the England, they wants to going out from the European Commission, and they called about the Brexit, the name of um, the new commissions that they can do with the Ireland, with the Sweden, and also with the Denmark, and also with another country that's in the north of Europe. They want to be make some different standard between the European Commission that mostly in they have the most of the member from the East Europe. After the examples, we are going to the end of the courses. in these parts or in these courses, we have 5 point of view that we can learn from the informations why we need to make some consolidated financial reports. The consolidated report will provide us about the comprehensive picture. What is the government entities? What is their needs in a central and also in a local leaders or by the local activities. The second, we can make some standard from the IPSAS because IPSAS will play a key role to define what is the best of consolidated standard and also what is should be eliminated in this consolidated financial report. The next summary is come from the consolidation methods based on their level of control. We doesn't have the what is the best methods that should be applied for the central government or local governments, but we have the three consolidation method for the full consolidations, the proportional consolidation, and also the most and the common methods is the entity methods because we have the non-controlling interests between the central government to the local governments. The next summary comes from the uniqueness of challenges by the public sector while they creating or while they provide about the consolidated reports. In the end, we have some proper implementations in the European Global Commissions, and we can learn that they have leveraging their accountability and also with the financial transparency. Yeah, until these sessions or until these slides, you may any questions or maybe you have any questions to share about these topics? Any questions so far?
None, sir.
None questions? Okay. Yeah. While there is no questions, I have informations. I think that this is the very yeah, okay. I just checking about the current situations about our platform, the Ukrida virtual class or UVC. Our UVC is still under maintenance until the estimating is maybe in 19th of March they can do in care or in the end of the maintenance. So we cannot place with the materials the link of the recording, but I will sending the materials from the chat room and also the class recordings through your virtual class, Alexa. Maybe Alexa will share to you about the recording of this activity. So while the UVC is still under maintenance, you can make this following topics to discuss with your friends. You can pick your friends individually or maybe you working in groups. It's depend on you because you are in amateur conditions. Yeah, you are is above or 18 years. So I think that you can do with your intelligence. You can do with your responsibility to discuss these topics with your friends or you need to decide with your individually and you can send the answers in a persons or individually to my email in a maximum in 23 of March. So I give you maybe 5 days. 5 days from now to discuss and send the answer to the email. So what is the questions? You can check to the next slides. The discussions of questions is consists of 4 questions. We can start with the questions why the consolidated financial statement is important in the public sector entities. Please discuss and write your answers because you cannot post to the UVC, write in your Microsoft Word and then send to my emails. For the second question is, what are the key differences that you can find for the full consolidations and the proportional consolidations? Please refer to the ebooks and also with the IPSAS standards. The next questions, how IPSAS can influence the public sector consolidations? It should be a general standard, or maybe they have some challenges to implement in the public sector entities. And the last questions, what is the biggest challenges from the government, even they are in the central and also with the local governments, when they want to make some consolidation financial statement between all of the units, all of the public entities? That's under their powers or under their controls. So what is the biggest challenges? You can make some example from your country. You can make some example from the general conditions. It's depend on your point of view. So there is no right or there is no wrong answer, but this is based on the intelligence and also with your point of view. So to remind you, please discuss these questions with your friends or individually, but please send the answers in individually until the 23 of March. So you can send your answer to my email. Here my email, septian.bayu@ukrida@ic.id. And if you have any specific, sorry, if you have any specific informations or you need to gain some informations or with the comments about these materials, please do not hesitate to contact me by the emails. So I can make it for generals from the next meetings, but maybe if you need to clarify individually, I can answer it personally to you by this email. Okay? Any questions so far about the questions and also with the time and the durations to answer your quizzes? I will take this as the part of the quizzes. Any questions so far?
Good evening, sir. I just
Yeah.
want to ask about the quiz last week.
Yeah.
Not everyone had the chance to take it before, the malfunction of the.
Yeah. I get your
Yes, sir.
information, Rosman. Yeah. Thank you for confirming, Ken. Yeah, last week's we have the trouble while we are doing quizzes in the UVC. So I make a decisions that the quiz in the last sessions is still in a cancels. Yeah, we are canceling the conditions about the quiz in the last sessions. So even you have make some assessment or you can make some attempts for the last quiz, it will not be assessed. So it's clear for you. So there is no score or there is no quizzes in the last meetings because none of you or not at all that you can finish your quizzes in time because we have trouble in the maintenance of our virtual class. So I changed the quizzes to these discussion questions. So you need to answer these parts as the part of the quizzes for these sections and also for the last sessions.
Thank you,
Clear?
sir.
Yeah. Another questions? None questions so far? Okay. Let me to stop share. Okay. From the UVB, Do you have any informations to share or no? Alexa or Catherine?
No, sir. Thank you.
Okay. Thank you for responding. Yeah. Thank you for joining and helping us in this class, Alexa and Catherine. I also thank you for the students that are coming in the most of the sessions. Before I end the sessions, please write in your chat room that you are present in this class. So I will record this as the presence actions. Yeah. So I repeat again. Please write in your chat room that you are present. Just write present, because while you write your name, that's or you can make some rename with your interaction of this Zoom activity, which will be recognized as the presence of the studies. Okay.